Okay, thank you, dear ladies and gentlemen. I'm very delighted to have this opportunity to present Gesco to you, to introduce it to them who don't know us yet. And I'm very grateful to GBC to have this opportunity here. My name is Peter Alex. I've been responsible for investor relations and corporate communications at Gesco for the last 3 years. And let's just start right into it. As you all know, the German economy is not doing particularly well at the moment. And there are a number of problems in the mechanical engineering sector in particular. And naturally, Gesco and its subsidiaries are also affected by these less than favorable framework conditions. Nevertheless, I would like to take this opportunity today and to show you why Gesco is quite well positioned to benefit from a recovery which eventually will come. Nobody knows when, but eventually it will come, and why it's really time to take a closer look at Gesco. Okay, one of the more significant changes in recent time was the appointment of our new CEO, Johannes Pfeffer. He joined Gesco October 1st, so roughly 2 months ago, and he had a running start, to tell the truth. He has already shared quite a few initial views of Gesco with some capital markets partners and at some opportunities just last week at the Eigenkapital Forum, but probably a few of you weren't there, so I'm very happy to repeat this a little bit and also to share some highlights and key aspects of his agenda, which is coming soon. Just a few words to Johannes himself. He has held a number of positions of responsibility in his career, and his most he desires the most to run really a very efficient organization, and lean management is really has run through his entire professional work life, and he wants to or his goal is to implement this lean management throughout the entire Gesco group. And from what I heard from his first visits at the different subsidiaries, he sees quite a few things he wants to change a little bit more to more lean management. Now, for the people who are already in this call who know us, I go through the business model quite quickly. It won't surprise you that we won't change a whole lot of things. As I said, Johannes has been with us only for 2 months. He replaced Ralf Rumberg, some of you might know, who left the company as CEO end of June this year. And obviously, quite a few things which already was done under Ralf Rumberg was something Johannes found and is very fond of. But obviously, a good company never stands still, and therefore there are a few points where he wants to build up to the next level. And so you don't see a whole lot of changes in our business model under the words enabling, investing, and expanding. So probably a little bit new to this, Johannes wants to implement a GBS, the Gesco Business System. And I guess quite a few of you are familiar with the Danaher business system, and Johannes had the opportunities in his past positions to develop his own view of the Danaher business system and implemented it before, and therefore he is very confident that he will implement a GBS, a Gesco business system, in the next months, quarters, years. And he really, what is it all about? More or less developing and further developing best practices based on lean management. And already today, this is rolled out, but more is coming in the next quarters and years, obviously. One thing will stay the same. When we purchase a new subsidiary, we do not have an exit strategy. This stays the same. We are investing in good value. Our targeted companies will be medium-sized industrial companies with long-term potential. little bit different than many years ago, where we also bought not typically our 100%. Then we said, okay, we also or we only take majority owned, but less than 100%, we prefer the 100%. If there are occasions where we want to have one company in particular, and for example, the managing director wants to stay on board, then we probably will give or let him keep 20-25%. But if we have a wish list, then typically it's 100%. And what we want to drive through, and we have done this also in the past, is especially the customer centricity. This is something Johannes stressed in all his talks to the subsidiaries, that this is really what we want to concentrate on, because this is the best differentiator in our markets. One thing which we'll continue to do, or we will continue to do, is to go global. As you might know, Gesco has been expanding globally in the last couple of years, especially with a focus on the United States, and not only since the election results came through, and we know that Trump will be the new president. This orientation is further validated. It's very important to have a strong position in the US, and more or less all of our subsidiaries are working on establishing even a larger presence in the US market. A little bit new, or coming not only because of Trump, but also of Trump, is this local for local philosophy. We see more tariffs popping up, and probably with US politics, it will become even more important. So it's very, very important to be locally at the place you sell your goods. And we will continue building up stronger positions in our most important markets overseas. We will continue to provide our subsidiaries with all the means necessary to expand, both just by expanding their business opportunities, but also, for example, through add-on investments. 3 new numbers have been introduced to the capital markets with the arrival of Johannes. They're not totally new. We always said we want to grow with our subsidiaries and to grow faster than the underlying markets. Now, just to give you a number, or the capital market a number, is that we want to have our companies grow by at least 7% a year on average, obviously, have a return on sales of more than 10%, and a ROCE of should be larger than 15%. Now, I already will stress that not all of our companies are already at this level, obviously not, especially not in the current framework conditions, but this is what we are striving for. And there are a few exceptions. Some of our companies aren't just not in this growth mode. We realize that, so our goal is to have all our companies at least being able to reach 2 of those goals in the medium term. And if they reach this, then I believe we will be, as a group, a very successful group. Now, I picked out 3 of our subsidiaries. I want to show you a little bit, and because I believe that these 3 companies, 3 very different companies, give you a pretty good picture of what we are doing and what we are planning on doing. Dürnberg, as you probably know, is our by far largest subsidiary with more than 200 billion in sales and more than 500 employees. We have been very, very successful in the tool steel business, but Dürnberg is quite an old company, and we have a lot of manufacturing depth at the moment, for example, and in the long run, we want to be mostly a distributor of the tool steel, and focusing on purchasing, refinement, and distribution, and not so much on manufacturing our steel, which we sell ourselves. We do have a complete portfolio already, and the focus is on the tool steel material, which should be delivered as fast as possible on demand. More or less, we can do everything into the tool steel business at Dürrenberg. It's cold, warm, fast, plastic, precise. Dürrenberg offers it all, and therefore it's a one-stop shop. That's the goal. And in most of cases, we fulfill this goal, and we are working on it to become a household, or that our customers don't even have the idea of going someplace else. And our refinement at Dürrenberg is based on the customer's demands, and we believe this is the coating, hardening, and machining of the tool steel. Dürrenberg, we are very, very happy about having Dürrenberg in the portfolio. Sometimes it gives us a little problems, especially in the downturn times, which we're experiencing right now, because as a distributor of tool steel, they are very, very dependent on steel prices and alloy charges. And at the moment, or not only at the moment, but for the last 12 months, these prices have come down, and therefore the earning situation at Dürrenberg wasn't quite satisfying. We are still profitable, but on a very, very low level. But keep in mind, this is just a thing of the moment. Dürrenberg, with their business model, they are experiencing quite a high volatility in earnings, and at the moment the earnings are going down. But we believe that we probably have already reached the bottom, and in the very foreseeable future, we see an upturn again. This is just the cyclical business of Dürrenberg, and nothing really to worry about. A company we are very, very fond of, not that we aren't fond of the others, but it's always a pleasure to talk about SVT, because this is right now the company with probably the best prospects, and they are really not affected at all from difficult framework conditions. Quite the contrary, they have fantastic framework conditions for their business. SVT is one of the leading companies when it comes to loading all kinds of liquids from one thing to another. The most interesting part of that is the ship loading business. We are also loading at other places, but the ship loaders are by far the heaviest, the biggest, and therefore the most profitable projects we are selling at SVT. As I said, we have been one of the market leaders in this business, and in the field of LNG, which has become tremendously important over the last 2.5 years, obviously, since Russia invaded Ukraine and we got rid of the Russian gas. LNG has been very, very high on the list of things of importance, not only in politics, but especially in the economy, and not only in Germany, but all over Europe and all over the world. And this is a business which probably will, for the next 4 to 5 years, give SVT a great order intake. There are so many projects where SVT is involved already, and for the ones where they aren't involved yet, they probably will, because they are already by far the market leader in the LNG business, and therefore very, very well positioned to excel in this field. And as I said, all the other liquids they are loading, for example, oil or chemicals and stuff like this. I mean, this base case is just running smoothly, not really growing a lot, but LNG is the growth or gives SVT the growth perspectives at the moment. But this is not, this will probably be good for the next 4 or 5 years for a growing business. And we don't want to see S4T just dropping then. So we are already concentrating today on two other things which can be shipped, and this is hydrogen and carbon capture. We already have developed a hydrogen loading arm, and the same is true for the carbon capture. Both the loading up of hydrogen and carbon capture is right now only at the very, very, very early stages, but we believe that both topics will gain in importance, especially the hydrogen part, and probably in 4 to 5 years, when the LNG business is slowing down, then the hydrogen business should pick up and more or less continue the high demand for SVT's projects. So SVT we see has a very, very bright future. Amtrion Group is one of the smaller companies in our portfolio. They are already one of the world market leaders in load-bearing systems. You see here a picture of a load-bearing system in hospitals, and most of their business is done with the hospitals, but also the same is true for the industrial markets. We have developed new arms, and they are already they are fully developed, but now they are in the process of getting the licenses, for example, in the United States and other places. And we believe that as soon as we are allowed to sell those products, their business will pick up. As you probably know, hospitals, especially here in Germany, but all over Europe, are still a little bit reluctant to order new things, new machinery, new load-bearing systems, and therefore it's still a difficult market, but with the new loading arm systems we have developed and the new companies we gained as customers, we believe that Amtrion also has a very bright future in front of them. And with all those companies, Dürrenberg, SVT, and Amtrion, and all the others, I mean, one of their main topics, as I already mentioned before, is they all want to go global, and go global, although we mean this, also means very much going to the States. Okay, I will just run through the Q3 financials in a very, very short time, just to give you a little picture of where we stand right now. As you can see, the incoming orders are more or less over the last 5 to 6 quarters on par. Haven't really decreased a lot, but for sure didn't increase a lot. We do profit from the very, very nice order intake of SVT. Without SVT, the group would have a book-to-bill ratio below 1. With SVT, we do have one well above 1. So are we satisfied with that? Obviously not. We would like to see incoming orders gain more momentum, and we believe that this should pick up eventually. We still don't see really good signs now in the fourth quarter that a pickup is coming, but at least we also don't see any more declines. So and the incoming orders more or less are sufficient to keep the sales on a pretty good level, but obviously we, as everybody else in the industry, is looking for more incoming orders, and therefore to have a brighter future in sales. But as I said, right now we probably are at the bottom, and from where we see it, the way, there's only one way through this, and this should be the way up. Already in earnings, you are seeing slight improvements. We are still by far not on the level we want to be, and by far not on the level we have been in the 23 or even in the 22 years. But we believe that eventually earnings should get better again, and that's the reason that we haven't really decreased our employees, although this picture is not of the whole number for the group doesn't show the whole picture. As you can imagine, we increased the employment at SVT and other companies which are really doing well. Others where we have seen declines, then obviously we reduced employees there. What we have done is that we have used all the possibilities given in mostly Germany to reduce extra workers and part-time workers, and working with our contingents and stuff like this. So we are doing all our best to be quite flexible, but we are still not at a point where we want to really decrease our core staff, because we believe eventually, probably in 25, we should see a quite sizable pickup again, and then we want to have the staff in place to handle the upswing. As you can see, our forecast for 24, well, I mean, it's below 23 and far below the 22 level, but still a little higher than in 21 and 22 in 2020. So just to give you perspective, so on the sales side, no, we are not satisfied, obviously, but I mean, it's not terribly disappointing. Not really satisfying is the earnings situation, where we are on the level which is very doesn't satisfy us at all, obviously. But although we haven't given a forecast for 25, obviously we want to see a higher earnings and sales situation in 25. But I also showed you this slide because I wanted to point out, even though we are going through rough times, we are still profitable. And obviously these forecasts are without M&A activities. A few bright spots. We still have a very, very high equity ratio. The small decline is mostly due to the dividend payment and the share buyback we did in April this year and in May. Then, as you can see, the net debt decreased compared to the end of last year, and the same is true for the WOC. For the working capital, I want to mention that this has been on our priority list for a long time, and we want to reduce it even further, and we should be able to do that. If I look at our equity share price, I mean, it's terrible to tell the truth, but I wanted to show you that we have increased the value of our company. So I brought you the equity per share over the last 12 years. And just to give you an idea, at the very beginning of this, in 2011, 2012, the share price was roughly 22 euros. Right now, we are a little bit low, 14 euros. So the decline has been quite substantial, and therefore the gap between the equity per share and the share price is tremendous. And for me, it signals at least that probably a pretty good turnaround story. I just mentioned that we did our first share buyback in April this year, the very first of our company history, and together with the dividend, we returned roughly 62% of group earnings to our shareholders. And in the future, we plan on both using a dividend and a share buyback to return group earnings to our shareholders. And to sum it all up, we don't at the moment see really no signs of a market recovery, unfortunately. Probably, or maybe political changes, which will come, we are sure, will trigger something, we don't know. What we have seen for all our companies, more or less, is that the burden from over orders have largely been melting away. So we believe that in 25, the order intake for most of our companies, if not all, should be better than in 24. So this will help us a little bit. What Johannes mentioned, he has 5 priorities, and this is the organic development of all portfolio companies. He has already discussed in detail with the management teams what he wants to see. As I mentioned, he will develop a GBS system for everybody of our subsidiaries and implement them. And this will be his focus number 1, but then also we will have inorganic growth through our portfolio companies. We will increase their activities through adding some add-on acquisitions. That's his focus number 2. And parallel to that is also that we are probably a little bit streamlining our portfolio. And obviously we are a company where we want to have also inorganic growth, and therefore we will be and continue to look for larger investments, which will then be base investments. And with just a small stare on our share price and the research we have, most our analysts really are quite bullish for our company, and I have no reason to disagree. And with that, I would like to answer your questions.
Excellent presentation. Thank you so much. Yes, the audience is welcome to post questions in the Q&A function or the chat. So you said that there could be add-on acquisitions. Could you say for which company and what is your M&A strategy? Do you focus on multiple valuation? What could be a possible valuation, and what sector could be interesting?
I really don't want to get it. Well, more or less every one of our subsidiaries is considering add-on acquisitions, maybe just the smallest ones, especially Franzfunk and Astroplast, not so much, but more or less everybody else. So we are focusing on add-on acquisitions which help to increase the value chain at the subsidiaries, and we are not looking really too much at the valuations, although with add-on acquisitions the valuations are much lower than, for example, with larger companies. And the nice thing is with add-on acquisitions, the risk is much lower because our subsidiaries already know the targets quite well, probably have been working with them for many years. So the risk reward is quite high. Therefore, add-ons are our first priority, and everybody of our companies, except the 2 I mentioned, are looking for some add-on acquisitions.
Excellent. So we have just 1 minute left. Maybe you can wrap it up with just a short investment case for potential investors. What would be the big things to look out for Gesco? Where could it go up and down, and what is the big chance to invest in Gesco?
Well, if you like the deutsche Mittelstand, the German Mittelstand, Gesco should be quite high on your priority list of companies to invest in, because we are standing for exactly that. We are running through tough times at the moment, and that's the reason for our depressed share price, but this won't be forever, and we believe that Gesco is probably better positioned than almost everybody else to profit from a recovery in the German economy. One thing to mention is we are also on our globalization path, and we are working on that as well, and are already quite well positioned in the US. So I believe it's a very good investment case.
Excellent. Thank you so much, Peter.
Okay, so you're very welcome, and thanks for the opportunity.